if you look at, there are about 800 million adults in India. Out of them, 500 million people have already borrowed. And the record of those 500 people is already there in the credit bureau. If you exclude microfinance also, there are 400 million people who have credit bureau records. So as per our calculations, even today, as of today, there are 100 million people in India who can potentially get a credit card. Out of which we have given credit cards to only 40 million people. So there's still, even today, a very big gap between how many people can get it versus how many people have it. Now, if you look at GDP per capita, India is at a GDP per capita of $2,500. This is going to grow to $4,000 and $4,500. And this is the time when GDP per capita grows, the middle class expands dramatically, and the need for consumption credit explodes.
A very warm welcome on behalf of India FinTech Forum. I am Aditya Rajkothari, and I have Mr. Rupesh Kumar, co-founder of OneCard and OneCode, who has joined me to discuss about credit industry and his entrepreneurial journey. He is passionate about building and scaling digital products and has over 2 decades of experience in digital products, technology, payments, and user experience. A very warm welcome to FinTech Leadership Series.
Thanks, Aditya. Happy to be here.
Yeah. OneCard is considered as India's best metal credit card. Within just 3 to 4 years, the company valuation has reached $750 million and it's racing towards a 1 billion market capital. What was the inspiration behind starting OneCard? What has led to this success?
Good question. First of all, let me start by saying that valuation is not really a metric that we track. We are much more focused on business metrics like number of customers, spends, activation rates, and customer experience metrics like NPS. Valuation is usually a byproduct of that, so that's something that we are not really tracking. So I would say that what makes a good startup, or any great business is a combination of three things: the market that you are competing in, the people that that you're working with, and of course the product that you put in the market. So there's a great quote from Mark Andreessen which says that if the market is large enough, the market pulls the product out of you. So the first important thing really is the market, and then the people. I will start with people because in our case the journey goes back much back in time before this company started. So all the co-founders used to work in ICICI, and if you know ICICI is a great melting pot of entrepreneurial talent. A lot of people across the industry, who are CEOs of companies come from ICICI, and it has this unique blend of people, who are financially minded but still very entrepreneurial, working on creating great products. So it so happened that Anurag, Vibhav, and I, the three initial co-founders, we started as management trainees in ICICI and working in different parts of the bank. Anurag and Vibhav actually started with the credit card business when it was getting started. That was way back in 2003. I joined the bank in the finance and strategy division and got to work very closely on the finance side of things. And what happened is, over a period of time, all the three of us got to work with each other in a lot of different kinds of settings and businesses and products and projects together. So, whether it was Vibhav working on FASTag, Anurag working on building PL and credit card, and I working on building mobile banking, wallet business. So the three of us used to work together a lot on different kinds of products, and that's how we used to jam together on a lot of different ideas. At the same time, Hari and Devang, who are the other two co-founders, they were handling analytics and operations, and we also got to work together. So the team sort of got founded in ICICI. Of course, we dispersed after that, but stars aligned and we all came together to sort of look at this opportunity. The big opportunity that we saw was on consumption credit, and we saw that as the market grows, as the wealth standards grow, what happens is consumption credit takes off because aspirations are high, affordability is not that high, So that was one piece of market that we found is going to grow, and that's what we went after. And the product vehicle that we chose was credit card, because that's something, we debated a lot, on what product vehicle we should like go with. But credit card, sort of an established product, but pretty ripe for changes in customer experience, because things have been very static for the last few years. And that's how we sort of came to this product idea, built a full stack product from grounds up, building the full technology stack ourselves, completely from grounds up. So every piece of technology that runs this product is completely built by us. And that's how we got a product, which competes on experience in the market. And that's how the team came together. So that was a confluence of market, product, and team coming together to build this product.
That's wonderful. The majority of Indian population prefers traditional banks, particularly the security of having a physical business location they can visit and real people they can reach out to when they have issues or concerns. How does OneCard helps build trust within its consumer segments?
So that's a good question again. We thought about this a lot, right? Look, ICICI has like 6,000 branches. The reason why it has so many branches is because people can touch and feel the brand. They can go walk into a branch at any point of time. So how do we solve this in a digital world? What we really saw, during like my last few years in ICICI was UPI was already creating sort of a big digital ecosystem in the country. UPI was just taking off, and what UPI really did was made people very, very comfortable with, using a mobile phone for doing digital transactions. Even my mother, who never used a debit card in her life, she never withdrew money from ATM. She uses her UPI app to make payments to the bhajiwalas. So that's what it has done. What it has done is made digital distribution very, very mass. And we are sort of riding on that wave when the consumer is already confident of using a digital product. But what we saw early was on the credit side, especially, there were a lot of hesitations, and especially on credit card, there were a lot of customer concerns of overspending and charges getting levied on them. So the first product that we actually launched was OneScore. So OneScore is a credit score app. It allows you to keep a track of your credit score, and there our motto is no ads, no spam. Right? We only give you insights on your credit score. And what it did was very initially, built a lot of trust and a community of users who know that we don't spam them, who know that we are trying to help them, trying to keep a track of their scores, and that's how this whole initial community built. But we were very aware even when we launched OneCard, is that we need to have channels where customer can talk to us. Just having a bot was not sufficient. People needed to reach out to us and talk to us like real people. So we invested from very early days in in all kinds of service channels, whether it is phone, whether it is chat, whether it is email, whether it is social. So we have all the channels that are available to the customers. Customers can reach us, and talk to us directly when they have concerns. And this was clearly, when you are dealing with money, you want to make sure that there's always a communication line open with the customer where he can call up a human being and talk to him, right? And so that's how we are solving this problem of trust. And but obviously we are riding on the shoulders of giants like UPI, who have already sort of done the hard work of making people comfortable with the mobile channel.
Okay. For mobile app-based banking, a lot is riding on the mobile channel and the mobile app itself. Consumers use the mobile app for many important activities and transactions, including opening an account, accessing their money, making payments and transfers, and shopping. Since the security of the mobile devices themselves is beyond the control of the app developer, what security measures does OneCard take for the additional protection for mobile banking?
So see, it's it's an emerging medium, and now that customers are very much used to it, we have gone over and above what controls that usually applications have in terms of security. The first thing that we have is we have given the full control to the user, which means that the user can switch on and switch off his card, set up per transaction limits, decide whether he wants to use the card on an ATM or not. So all these controls are available to the user right inside the app, can be disabled, enabled instantly. We also came up with some very novel features, which you don't see in other apps. Two of our features are swipe to pay and swipe to auth. So usually you'll see that when you're using a card, you have to put OTPs on web pages to authenticate the transaction, right? In our app, we built a very unique feature where instead of putting OTPs, you get a push notification on your app. You log into the app and then do a swipe on the app. So the same app that you are using for logging into the app, you're using for authenticating your transactions as well. And that gives a lot of confidence to the users because they're using it, and the pin and it's attached to the device. Also, from the very beginning, we have been very, very careful about data handling. We know that data is very, very important for our users. So we have invested a lot in our information security architecture. So we are PCI DSS compliant. We are ISO 27001 compliant. We also comply with RBI guidelines on digital payment controls. So a lot of effort goes into making sure that your data stays safe with us. We don't share your data with anybody, and we have built adequate protections around your data. So that you feel safe when you use our app.
That's amazing. OneScore is India's leading AI-based credit score manager. What advice would you like to give to the millennials and the Gen Z to improve their credit score and avoid getting into unwanted debt?
Again, a good question. So, the first thing I realized when we started OneScore was that credit score is not a static number. I have worked in this industry for 15, 17 years, and I didn't know that your credit score changes every month. So I think it's a hygiene now for you to check your credit score very regularly to make sure that your data is getting reported properly, your score is getting constructed properly, because that's the basis on which your future borrowings are dependent, right?
Yeah.
And if you miss a payment, please ensure that you quickly go and make a payment and not keep the payment due for a very long time. That is the biggest predictor of your credit score. If you miss a payment, your score will drop very, very rapidly, right? And the last thing is make sure that banks look at any previous defaults. So make sure that you never default, and pay on time. And the last bit is really, if you don't have a score, there are products which help you build a score. We have a fantastic product called a secured credit card, where you can get a credit card against an FD and have all the features of OneCard that are available to other users. What this does is, as you make your payments on a regular basis, your information gets reported to the bureaus and your score gets built up over a period of time. And that really helps you, borrow for other products. So that's what I would like to say to you.
Inefficient data management, limited risk modeling infrastructure, and lack of proper risk management tools are a few of the challenges faced by the credit score management industry. How does OneScore overcome these challenges?
See, I think on the credit side, I don't think there is a lack of data. The data is already there. India is home to the largest bureaus in the world. We have more than 500 million records in the bureau now, which is more than the entire population of US, right? So, and India made a very early decision and a very wise decision that both positive and negative data is reported to the bureaus. So that way, it really helps in making a decision when you have both positive and negative data in the bureaus. What was lacking was, transaction data and banking data, which is your account data. What RBI has done is RBI has launched an account aggregator framework. It's a very, very forward-looking regulation. I would say it's much better than what you see as open banking in Europe and other geographies, because it has a very strong consent mechanism built in, where consent is held by third parties which are regulated by RBI. So the user has a right to give consent for his bank account information to any provider and withdraw the consent as well. So that with this, what happens is you both have the credit data and the bank account data, and it allows very, very efficient and strong risk management. Coming to your third part, which is on the tools, I would say there's a level playing field now there. With the advent of cloud, the best risk tools and the best infrastructure is available now for anybody to use a mix of open source or commercial tools on a pay-per-use basis. So it's not that expensive as well. in earlier days, you had to set up a warehouse, you had to buy the risk management tools and then do risk modeling. But now you can actually get all of that on a pay-per-use basis and build really efficient risk management models.
That's amazing. Several banks like IDFC Bank, SMB Bank, South Indian Bank, Federal Bank, and Bank of Baroda have tied with OneCard, and investors like Secular Capital, Matrix Partner, and Hummingbird Ventures, to name a few. What does your growth strategy look like for the upcoming years?
Of course, we are very grateful to our banking partners and investors for having shown the faith in us. We want to make sure that we make a good product and give good returns to our banking partners and investors as well. See, the underlying thesis on which this company is built is that consumption credit is going to grow. So if you look at, there are about 800 million adults in India. Out of them, 500 million people have already borrowed. And the record of those 500 people is already there in the credit bureau. If you exclude microfinance also, there are 400 million people who have credit bureau records. So as per our calculations, even today, as of today, there are 100 million people in India who can potentially get a credit card. Out of which we have given credit cards to only 40 million people. So there's still, even today, a very big gap between how many people can get it versus how many people have it. Now, if you look at GDP per capita, India is at a GDP per capita of $2,500. This is going to grow to $4,000 and $4,500. And this is the time when GDP per capita grows, the middle class expands dramatically, and the need for consumption credit explodes. We expect that in the next 5 years, the addressable market for credit card is going to go to 200 to 250 million people. And therefore, we think there's a lot of headroom for us to grow in such a large market. We are in no hurry. We want to grow in a risk calibrated manner and get a small portion of this large market.
What entrepreneurial advice would you like to share with the upcoming entrepreneurs in your industry?
It's a good question. Easy to answer in hindsight, but very difficult when you are making the decision. I would say the first thing is figure out a problem that you're passionate about, because you're going to be working on that problem for a long, long time. If you are really not passionate about something, you can't work on it for 5 to 10 years. You should have that kind of time horizon in mind. So that's the first thing that I would like to tell people. The other thing is find a set of like-minded people. There will be lots of ups and downs. Every day is a new day here. So unless you gel together as a team, and not just the founders but a larger team, it's hard to go through this journey. The other one is what I said at the beginning of this presentation, that look, basically find a large market or a potentially large market that you're going to play in and build a good product there. So these are the things that you need to keep in mind when you are making this decision. And of course, don't think of vanity metrics like valuation and how much money you'll make. Those are byproducts. If you're successful, those will come. If you're not successful, those will not come.
I thank Mr. Rupesh Kumar, co-founder of OneCard and OneScore, for sharing his valuable insights on credit industry and his entrepreneurial journey. Thank you for this wonderful interview.
Thank you, Aditya. It was a pleasure talking to you.
Yeah.